Welcome to Technical Tuesday. This is Fed Zach, Senior Trading Strategist here at CMTrading. Today, I'm going to break down the advantages and disadvantages of using AI software to trade the financial markets. But before we start, make sure to smash that like button, share, and do subscribe, especially if you find value in this presentation. Okay, so I've been getting this request a lot lately. Do you have software like AI that can trade the financial markets? And it's not the be-all and end-all. And we're going to delve into that. But before we start, I just want to give you a background about trading software. It's been around for a long time, at least since I've been trading the financial markets. Some fantastic systems, some not so fantastic systems. And this is the part, okay, that you got to keep into perspective. Trading changes over time. The element of trading changes over time. So software becomes obsolete. A software that made money 20 years ago in the financial markets is not necessarily going to make money in today's markets, okay? The variables have changed, so you got to keep that in perspective. But in general speaking, there are some advantages of using AI trading software to trade the financial markets, and there are some disadvantages. So let's just get straight into it. Number one, no emotions. When you move or remove the human factor, there's no human emotions. Most of the mistakes that we make as traders are based on human error and based on emotional error that we impute into the markets. And so if this is removed, it's fantastic, right? The trading is just happening using the markets straight out. Number two, discipline. If you're not having a great day as a trader, you're not so focused on that particular trade, and you're having an off day, well, that removes that as well. The system just knows what to trade the financial markets based on what you impute into the software, and that's all it's going to do. So whether you're having a bad day or not bad day, a trading software is going to always have a consistent day. All right, so that leads us to number three, which is very important. There's going to be consistency. Many traders are pulled into trades that are not part of their trading plan, but they're lured into it, and those type of trades usually end up with big losses. So you got to make sure that there's consistency in the markets. Now, number four, profits are allowed to run, right? This is very easy when you're not trading with emotions, right? It's very hesitant, and some of the mistakes and many of the mistakes that we make as human traders is that we book our profits a little bit too early and don't let our trading run. If I look at average traders across the board, across the world, every single one, I would see 90% would be winning trades, and that might be small, but they'd be winning trades, and only 10% would be losing trades, but those losses would be significant. That's what most traders do, and that's avoided when you're using a system. And lastly, losses are minimized because the system knows when to cut it loss. It doesn't get into the hoping state, and this is all part of it doesn't have the emotions. Now, on the flip side, what are the disadvantages of using a AI or a software-based trading platform? Number one, it's limited to trends. Normally, it's not high frequency trades that are being implemented in the markets. So they miss out on those type of trades because the market is not trading for most of the time in trends. So if you're limited to trends, that removes a big portion of the market activity when we're not in trends, when we're in a range bound, okay? And we're not, going from 0 to 100 over a 6-month period, okay? We're jumping off at two levels, okay? And those are harder AIs to actually impute. Number two, there are less opportunities as a result of that, okay? That's why it becomes a subset of that. Number three, really, it's greater exposure to the markets for a longer period of time. You want to limit yourself in your exposure to the market because anything can happen at any point. And those are usually the type of circumstance that we fall into that are life-threatening in terms of your account, that you get into debacle states. And lastly, non-trading markets are avoided because of that, okay? And we kind of touched on that just previously, is that we as AI trading platforms can trade trending markets, but non-trending markets it avoids, where the market is mostly non-trending, okay? 80% of the time the markets are not trending, okay? The 20% of the time that they are, it only limits those opportunities for those type of opportunities. So just keep these factors in mind. Not saying good, not saying bad, but these are some of the factors to consider when you're trading using a software-based trading platform. Thanks for joining me for this Technical Tuesday. We'll see you here next week.